Now, the debate continues on whether the rally has legs, and David Tice, Federated Investors' chief portfolio strategist, is adding his voice to the bearish chorus. And he used very interesting words there, Michelle.
Oh, absolutely, Heslinda. I guess you can't get more bearish than David Tice, who is calling this a sucker's rally. He says that the U.S. stocks rally will end within 6 months. And why? Because the economy just is not improving fast enough, and the fundamentals do not substantiate this rally.
The economy's in really, really bad shape. So many people are trying to be optimistic. We've just gone from oversold to very overbought.
So not only does Tice think the rally will end within 6 months, he thinks a new bottom also looms. Tice says that the S&P 500 will fall below 400 within 18 months. That's a level it hasn't reached since 1992.
We think it's going to get to 400. Yes. Now, I'm not going to put a prediction of 400 in 6 months. 18 months from now, I think we will have gone below 400.
Well, the S&P's advance since March has pushed its valuation to 20 times the reported operating earnings of its companies from the past year, and that is the most expensive since 2004. Tice's Federated Prudent Bear Fund returned 27% last year as the S&P plunged 38%. Now, he is a committed bear, and in April he said that the S&P was overvalued and predicted that it would eventually plunge to 325. Now, the index has rallied since then, but Tice says it's a sucker's rally because it's based on artificial economic stimulus. He says the government stimulus money is making the economy look healthier than it is. Now, the U.S. government and the Federal Reserve have spent, lent, or committed more than $12 trillion so far to revive the economy and the market.
I feel bloodied but unbowed. You know, we've seen this happen before, and if you understand the economic picture and see that we have never seen the amount of stimulus that's been put together so far is greater than World War I, World War II, and the New Deal combined.
And Tice also thinks that this market is going to be far worse, that the conditions are far worse, and we will see a bigger burst than we did when the dot-com burst back in '99. So he is certainly one of the big bears out there. Another Dr. Doom. Thank you so much for that.